Hello students, today we are going to practice how to hedge a stock. So let me read this question first. Suppose you hold 300 Apple shares with a current market price of 172. You bought these for 120 and therefore your capital gain is $52, the difference between 172 to 120. So 52 times 300 is 15,600 is the capital gain at this moment. You are convinced that the market is due for a fall, but don't want to sell the stock because Apple offers a high dividend yield every quarter. So you don't want to sell, but you want to fix the price you want to protect the stock price falling from then on. At the same time, you want to keep the capital gain of 15,600 even if the stock price would fall. Fortunately, you found out 6 months Apple stock futures that is being traded at the current stock price of 172. Okay, you found the Apple stock futures. You want to hedge it with this. So you should sell 300 Apple stock futures at 172 in order to fully hedge it. Okay, then you purchase the short Apple futures, 300 Apple futures. So let me explain in the tables, and then what would be the effect when the stock price actually falls to 150 in 6 months. Then okay, stock price falls. Stock price. The current stock price is as indicated 172. The strike price, the purchase price. How much is the purchase price? Right, 120. And then number of shares purchased was 300 shares. Then the current capital gain, investment gain, is the difference between this price, purchase price, and the current price times 300. Okay, so 15,600 as indicated in the question. Now let's hedge it with the future short selling. The 6 months Apple stock futures price per share is the same as the current stock price of 172, and the number of stock futures sold exactly same amount of the shares you have. Okay, you have. Now the total capital gain in 6 months. Now in 6 months it actually falls to 150. Then let's take a look at what happened in the capital gain from the stock price changes and the futures. Apple stock and future price in 6 months 150. The profit and loss on Apple stock during 6 months. What is the profit and loss on Apple stock? In total amount, how do you calculate? Right. The profit and loss during 6 months is 172. Okay, let me put 150 because the stock price fall. So the difference between 2 times, right, 300 shares the company has, that you have had. So the 6,600 is the profit, is the loss during 6 months, from 172 to 150. You lost $22 from the 172. Now the profit or loss on Apple stock futures during 6 months in total amount. Now we set up 150. Which one first? Right, here in the short sell, 172 minus 150 times 300. Why? The future means, the short position means even though market price falls to 150, you still have a right to you still can exercise the futures short position. Selling 172. So the difference between two is 22. The value of these futures is $22. The profit times 300 is 6,600. So the total capital gain, how to get it? You have had 15,600 before this short selling position. And then after that, you lost stocks $6,600, but you got the futures profit 6,600. So you can still maintain 50,600. Okay, you guys understood? Then what happened if the market price up to 200? So we put just 200 right there, 200 instead of the 150. So we realized that in 6 months the price of Apple actually went up to 200, not 150. But still, we could maintain a 15,600. How? Okay, we made a profit 8,400 because the current stock price has been increased from 172 to 200. So we earned the difference between two, right? The $28 per one share times 300. So we got 8,400 or more profit since then, since the 172 stock price. But we lost the future position in short sell position. The short sell position means that even though the market price went up to 200, you have to sell this the futures stock at 172. So we'll lose this $28 per one future. So 28 times 3, in total 8,400 is loss. But don't worry, because you make profit from the market price up. So the total capital gain on stock and the futures in 6 months eventually are the same as 15,600 before the short position. You can also change the number of stock futures sold. This 300 with the same as the stock price as same futures price as the stock price is the full hedge. That is the full hedge, right? But if you want to just like half of a hedge, let's say just 50% hedge, then as you can see that in this case we actually lost some money because we hedged half of the full amount. In this case, if we hedge it just 150 shares, then we make a profit because of the half of a hedge, we can make more profit in the stock than the stock futures. Okay, that is some portion of a hedge, some part of a hedge. In this case, we have a case of a full hedge, the same number of shares purchased in this case as well. So it is a very good example understanding the full hedge from the stock investment. Okay, see you in the next video clip. Bye bye.